This week, Trump stopped by Versailles and signed an incredibly generous deal with Iran. The same Iran that's been walking all over the US since February. Oil crashed below $80 a barrel. The main financial engine of the entire crypto market just stopped, and the new Fed chair made a major move that left everyone completely confused about the future. What's happening with Bitcoin? This Monday it was trading at 67k, but by the Friday it dropped below 63. It clearly doesn't like what is going on. If your head is spinning for all of this, relax. Over the next 7 minutes I'll connect all the dots. I'll show you who is really moving the market and review Bitcoin. And the most interesting part, we'll try to look into a foggy future of a massive global crisis with Bitcoin at $1 million. You are going to love this. Make sure to hit that like button, subscribe if you haven't already, and let's dive in. Let's start with what actually brought a bit of relief. It's not Trump or Iran, it's one specific person. On Wednesday, Warsh held his first Fed meeting. They kept interest rates the same, which everyone expected. But then he dropped a bombshell. He refused to submit his dot for the rate projections and publicly stated he doesn't believe in the concept of forward guidance. Warsh isn't going to tell the market in advance where interest rates are going, like Powell always did. And he didn't just skip one dot, he is shutting down the entire hint system. Let me translate that. Before, the market had a cheat sheet. The Fed would hint at what was coming next. Warsh just took that cheat sheets away. Now, decisions will be made live at every single meeting, based only on fresh data. And that means only one thing. Volatility is going to skyrocket. Every inflation report, every jobs report will be moving the markets much harder than before. Because of this, the US dollar has already surged to a one-year high, and the strong dollar is always bad for crypto. By the way, I regularly post a calendar of all these major macro events with my personal commentary in my X. When fresh data drops, what Fed members are saying, what the inflation numbers are, and what it actually means for us. The link is in the description. Go check it out right now. Now let's look at something that is honestly hilarious: the US and Iran. Since late February, the US and Israel have been in a conflict with Iran. Iran blocked the Strait of Hormuz, all oil prices shot up, and the crypto got choked out. Then on Wednesday we got the peak. Trump signed a deal. Where? In Versailles. Yes, the same exact place where the Treaty of Versailles was signed over 100 years ago. Back then they dictated terms to a defeated Germany. This time the terms are being dictated to America. It sounds like a joke, but it is not. Look at what is inside these 14 points. Lift absolutely all sanctions on Iran, including those from the UN Security Council and the IAEA. Unfreeze their assets. Let them sell oil starting tomorrow. And a separate point, a recovery plan for Iran of at least $300 billion. $300 billion. For comparison, the World Bank estimated it would cost $215 billion to rebuild all of war-torn Syria. But what does the US get in return? Iran solemnly promised not to build nuclear weapons. Promised. Everyone on Twitter is already calling this an absolute disgrace and a total surrender. Trump, of course, tried to defend himself. He said everything is great, the deal is amazing, and if you don't get it, you're an idiot. But of course, we all see the real picture. Yes, this deal crashed oil prices, but it's as fragile as glass. It's just a 60-day memorandum, not a final agreement. And that glass is already cracking. The talks in Switzerland and the signing scheduled for the Friday have already fallen through. Vance cancelled his flight. Israel is still causing problems in Lebanon, and Netanyahu is basically spitting in Trump's face. Basically, the market celebrated a peace that doesn't even exist yet. Quick update on SpaceX, by the way. We talked about it before. The biggest IPO in history has wrapped up. The hyped up crowd FOMO'd into the stock at 200 and above. And then, just like I warned you, the hype cooled down. Right now, SpaceX is trading at 185, down 18% from its peak. Anyone who bought the top is already in the red. Keep this in mind because we'll come back to the AI boom topic at very end. And yes, if you want to buy SpaceX at the prices we discussed, you can do it on Bybit. It's a one-to-one token with the stock, trading 24/7. Right now I'm just watching, but I'll be ready to jump in once the price drops closer to the initial valuation. Sign up using the link below the video to get a nice bonus for new users. Now, what everyone is talking about and why are they panicking? Remember Michael Saylor? Well, his company's engine just broke down. To put it simply, the whole MicroStrategy machine worked like this. They issue a special bond, STRC, which is supposed to trade around $100, raise money with it and buy Bitcoin. An endless motion machine. Well, this week that security lost its peg and crashed to around 85, an all-time low, and MicroStrategy was forced to pause the issuance. The engine literally stalled. Everyone on Twitter already attacking him. They say Saylor's Ponzi scheme is collapsing and he'll have to sell Bitcoin to pay dividends. On top of that, Saylor admitted he designed this bond using AI. Seriously. So, AI built it, the market tested it, and it's crumbled. That's wild. Alright, let's get seriously. This is just standard panic. The company still holds nearly 850,000 bitcoins, and last week they even bought another 1,500 through regular stock sales. Saylor himself tweeted, "Markets are closed, volatility is tough, Bitcoin is working and we are working too." The real risk here isn't a sudden crash, but a slow bleed. If Bitcoin goes lower, they'll either have to raise dividends, dilute their stock, or in the worst case scenario, actually sell some Bitcoin. No need to panic today, but it's definitely something to keep in mind. Now let's move on to Bitcoin and our plan, keeping it short. We are holding spot positions bought in the 60-64k zone, and we took some profit at 65k. And that was a great move. Bitcoin hit 67k, hit resistance and fell back below 63. The bounce fizzled out. Let's look at the levels. On the downside, we have a massive liquidation magnet at 60k. The price is being pulled there. My plan remains the same. I am holding spot with no leverage. If we pull back in at 60, I'll buy a little more. What would be bad? A weekly close below 60k would be bad, because that opens the door to 55. Our target remains the same, 71,000, and for that Bitcoin needs to get back above 67 first. And here's an interesting detail. On the weekly time frame, the price is making lower lows, but the RSI is showing higher lows. This is called a bullish divergence. It means the selling pressure is weakening, and on higher time frames, this is a big deal. But let's be honest, this isn't a guaranteed winning signal. The market needs to confirm it. And I only look for one confirmation: positive ETF flows. Right now money is still flowing out of Bitcoin. ETFs, meaning the real big money, hasn't returned yet. But the good news is we are starting to see early signs. The ETF outflows have slowed down to almost zero. Now let's talk about that foggy future I mentioned at the beginning. Arthur Hayes has spoken up again, and this time his thoughts actually make a lot of sense. Over the last few years, $1.5 trillion of debt-financed money flooded into the AI sector. This cash went into data centers, chips, and IPOs like SpaceX. It simply never reached Bitcoin because AI sucked it all up. That is why crypto is down. But here is the catch. Hayes believes that when the AI bubble bursts, and he's sure it will, the crash will be bigger than 2008 financial crisis. And then governments will do what they always do: fire up the money printers to bail out the banks. That fresh cash will flood directly into Bitcoin. His target, $1 million per coin. But that's the theory. Let me know in the comments, do you agree with Arthur, or maybe he needs to get his head checked? Let's sum up our plan for the week. We'll watch if the Iran deal holds, keep an eye on Lebanon, see if ETF flows turn positive, track the dollar, and watch if Bitcoin can hold 60k. Personally, I am holding spot, planning to buy more at 60 and trading alts carefully, more likely using grid setups. Make sure to subscribe to the channel. Next week I'll bring you a fresh market update. Smash that like button if this was helpful. My X link in the description, and that's all from me for now. See ya!